Welcome to Top 10 Sox Trends in 2016. We want to share with you what we see as we've worked with multiple Sox clients and various Big Six audit firms. At the end of each year, our team gets together to share our lessons learned, the trends that we see, and how we can proactively help our clients plan for the upcoming year. In this session, we will review the top 10 items, and they include cybersecurity, increased focus on system controls, ITGC, complications during system implementations, more report and spreadsheet testing, detailed entity-level controls, system segregation of duties analysis, statement of cash flow controls, related party disclosure controls, management review controls, and minimum documentation standards. The areas of increased focus are also gleaned from the SEC and the PCAOB. Because the PCAOB regulate the audit firms, their guidance impact what and how the external auditors do things, and that in turn impacts our SOX clients. So let's talk about cybersecurity. Cybersecurity is very sexy right now. Many people just think of cybersecurity as IT systems and risks. That's true, but at its core, cybersecurity is also about business risk management. If you think about the Target breach, that was not of IT systems directly. It was hackers getting through the HVAC system, not something that most people would be locking down. So the bad guys now have more electronic tools, and here are some of the ways that our clients are fighting back. System access is one way. They've looked at privileged account access, and they've looked at access systems across the board, not just IT, but throughout their organization, physical security and physical access as well. They've implemented or looked at governance or risk management program, meaning actively looking at risk, doing a risk assessment, or at least brainstorming the various ways that if risks were to, events that were to happen, what types of risks would they entail? There's reputation risk, so it's broader than just IT. What's the greater ramification? There's security monitoring, incident management program, which is proactively approaching it, monitoring responses for incidences and seeing what the activity is going on within your system. There's the security awareness program, which is helping combat social engineering like the wire fraud, hijacking, or spear phishing types of scenarios. There's threat and vulnerability management programs, which is the proactively actually pinging your system, actually doing vulnerability tests to see at which point your system would break. There's patch management process, which is focused on taking care of the easy updates to systems. Are those getting done on a timely basis? There's also the vendor risk management program, and that is taking a look at all of your vendors and seeing how important are they to your business, to your infrastructure, and if those vendors were to go down or if they were compromised, how would they impact you? And there's the data classification program, knowing what data is important to you and then protecting that data. If it's high risk like social security numbers, then you put more controls and higher barriers to reach that versus addresses. Maybe company addresses are readily available on the internet, so it's not something you protect as much. Number 2 in the trends is focused on system controls and ITGC. And so that's currently the auditors are looking at system controls and testing them even more because of the heightened cybersecurity awareness. They're reviewing controls for the accurate descriptions and testing whether those controls would really mitigate risks. They are ensuring additional testing is performed, so you'll see larger sample sizes. They're also making sure that the company knows about the systems that are in scope or the systems that could impact the financial statements, not just your typical one, but now looking at the business as a whole. Number 3 are the complications during system implementations. There's the completeness of their data migration. There's the user profile setup when you do a system implementation to make sure that the user profiles are appropriate. There's segregation of duties so that when you're upgrading a system, the responsibilities and the roles are set up to prevent segregation of duties, and ensuring that the controls are put in place into the system if they can. Number 4 is more report and spreadsheet testing. So that's additional focus on the completeness and accuracy of reporting systems and Excel spreadsheets. It's making sure that the third-party reports that you receive from, let's say, an ADP or a Equity Edge the reports can be relied on, and making sure that those certain reports, the company has identified the systems in the manual reports or the spreadsheets, a complete one, and key spreadsheets to test, and focused on information produced by the entity called IPE, which is the auditors are asking how the information was generated and are you able to prove that the source data that's generated is accurate and complete. Number 5 is entity level controls. We saw the increase in the level of details in entity level controls. Remember, for COSO 2013 framework, we mapped controls to the 17 points of focus and principles. Since 2005, we are seeing more requests for expanding the level of detail within the control language to ensure that the descriptions really cover the 17 points. So if you haven't refreshed your COSO mapping or looked at some of the language around entity level controls, you may have to do that in 2016. Number 6 is the system segregation of duties analysis. Auditors are asking for segregation of duties analysis within the systems themselves, and it's important then to complete the segregation of duties analysis early in the year so that you can identify the gaps early. This will give you enough time to fix things and avoid a mad scramble at the end of the year. Now, many of our clients have proper segregation of duties or have done the analysis and have mitigating controls. Unfortunately, they forget to write a summary once they're done. In those cases, when the auditors come, we're not ready for them. So writing memos as you go through the process is good practice. So summarize it, write it down. Number 7 is statement of cash flows. In 2015, our clients saw auditors asking about controls around the statement of cash flows, more so than before. Expect this to be part of the normal process in 2016. If you haven't made the change yet, consider doing it this year, because it's not typically system generated. You don't get all the reports that you need from the system to prepare the statement of cash flows. There's more likelihood that you'll miss certain things, or maybe you'll net, meaning you'll add to a positive and a number and you lump them in the wrong place. And it's also complex. A statement of cash flows is more complex to prepare than, say, a balance sheet or an income statement. And there are 3 areas that the auditors are questioning. It's around information, it's around people, and it's around timing. We have a separate blog coming up on this specific to the statement of cash flows itself. Number 8 is related party disclosures. There are new related party disclosures required, and it's another hot and heavy issue in 2015 that we continue seeing in 2016. You want to make sure you have controls around related party transactions, significant transactions, and the appropriate disclosures. The PCAOB has also issued Auditing Standard 18 that requires the audit procedures to be performed by the auditors to help them identify and evaluate the business purpose of the transactions and understand the company's financial relationships and transactions with executive officers, often by reading their employment agreements or their compensation contracts. Number 9 is management review controls. This has been around for 2 to 3 years now. It's the enhanced level of details in the narratives to include more criteria for the MRCs. That's also what management review controls are called. The auditors are making sure that you have specific dollar thresholds in your review, and you're basically asking you, what is your review criteria? Our clients are also classifying the MRCs into high, medium, or low based on the complexity of the review required and the amount of judgment that's involved. And lastly, number 10 is minimum documentation standards. Back in 2004, when SOX was first required, control owners had to sign off and date everything they reviewed. Over time, it's gotten more lax. Now, I see the trend is back and you have to sign off and add the date. It's no longer acceptable just to write approved. You have to document that you looked at the assumptions or ask the questions to ensure that everything's been addressed. And you have to keep evidence of the follow-up questions too. So to recap, here are the top 10 trends for SOX that our clients are focused on in 2016. Cybersecurity, increased focus on system controls and ITGC, complications during system implementations, more report and spreadsheet testing, detailed entity level controls, system segregation of duties analysis, statement of cash flow controls, more related party disclosure controls, management review controls, and minimum documentation standards. Hope this was helpful, and we'll see you soon.